It's the big budget day, and thank you so much for tuning into the trade setup right here on BloombergQuint Live. It promises to be a very interesting day of trade. Also because after a while you will hear me say that the cues are looking a lot more constructive for long positions. For the last few days until yesterday, I've been talking about how the cues may not be looking so. Now some indicators, some chart conversations, etc., suggest that things are looking okay. But first, to the key newsmakers of the day and the global perspective. Well, the Asian cues, remember, will be sedate and absent simply because of lunar holidays. So I'm not going to get into Asian charts at all for the better part of this week. Uh, Two important things: crude prices topped $91 a barrel due to supply constraints and geopolitical tensions. So that continues to be a niggle. What continues to be positive is on the macro front, the kind of growth that we seem to be exhibiting, and the GST collections. Most importantly, India GST collection crossed the 1.3 lakh crore mark for the fourth time. I think we nudged 1.38 lakh crores, which is quite astounding, really. So on the revenue front, there has been a bit of a positive surprise at the start of the year. I think very few people asked the government, what will you do with the kind of money that will come in? Because everybody thought, again, there will be a shortfall. And yes, on a bunch of other things, including divestment, there is a shortfall. But I think the GST collections, thanks to how Indian economies bounce back or seemingly bounce back, not completely over the hill and still probably just around the pre-COVID levels, but the GST collection and the formalization is really helping. So that's good news. Now, the other piece of good news is tech and the way tech has bounced back globally. So the US markets, you look at the Dow, the S&P, and the Nasdaq, they closed a horrific month of January, but the Qs on Friday and the Qs yesterday, both very positive. Nasdaq had a 3.5% uptick. Sure, the Dow and the S&P didn't have as strong a pullback as the Nasdaq, but still, all the three indices on Friday and on Monday have done really well, and therefore the Qs are positive. Commodities doing well. Yesterday we showed you a chart of how the last 6 or 7 weeks commodities have been doing well. Crude is in a rally of its own. It's been a remarkable last 24 months, wherein we've also seen crude in the negative territory and also seen oil heading for the best January in decades as supply remained tight, and of course geopolitics. So it's a bit of a debatable thing as to what does well and what doesn't. And if crude continues to move up to 100, 110, does it hurt the sentiment around India? In fact, Jeffrey's note yesterday seemed to suggest that both valuations and crude might come back and hurt us. But for now, from a trade perspective, it may look slightly different. The SGX Nifty should come up on a screen next very quickly. And let's just see what that is indicating for the session today after a bit of a rally that we've had. Another percent higher, and it's 17,507. It is expensive, yes, but nowhere close to 18,600 or thereabouts. So therefore, maybe from a trade perspective, things look okay. Yesterday, the trade was good, both large caps and mid caps. Remember last week, I told you yesterday that how banks were the only saving grace for last week. Yesterday was different, wherein a bunch of other sectors participated. The MOV function on your screen, 357 advances to 141 decliners. And you look at the gainers, Amber, on good numbers. I missed mentioning this in the trade setup yesterday, but good numbers compared to the Dixons of the world, and therefore did well. Tech bounced back. Look at the way Birla Soft, for example, has done well, or Info Edge did well, 11% higher. Root Mobile did well, about 12% higher, 11% higher. And then a bunch of others, APL Apollo, Gujarat Fluorochem, Chalet Hotels bounced back about 10%. So a bunch of those stocks did well. And the losers didn't quite have the kind of cuts that the winners had on the upside. So that was actually a bit of a difference compared to Friday's move, which is actually a good sign. Now the trade setup, the risk reward is starting to look favorable for contra longs. And you might argue that a bit of a contra position has already happened yesterday. But why I'm saying contra long is because we were on the downside and we've bounced back. Somehow the risk reward does sound a bit more favorable than what it was the whole of last week. Let's see if I get proven wrong. I mean, I as in the indicators that I look at, do they get proven wrong? It's no expertise of mine per se, but for a little bit of screen reading. But yeah, looks pretty okay as to what the leverage positions could do in the near term. I think the global support technology could help Indian tech stocks as well. And viewers, I think that's the difference right now versus what was there a couple of or 3 days back. That banking was doing okay, holding out, but tech wasn't. These two are heavyweights. Now we're seeing tech bounce back, banking holding out or maybe do a little better. Both of these put together aid the Nifty. That's the simple math, really. I would just urge everybody, especially the retail side and a bunch of new investors right in the country. So I would just urge to be careful with the budget beneficiaries for the pre and post budget trade. Um, Careful and quick analysis needed for positional gains, because by the time, if you think you are not on top of the ball, by the time you realize that this is a sure shot budget beneficiary post the speech, a lot of smart money would have already taken positions. So be careful. If you believe that the gains are there for long, you want to take a positional trade, great. If you want to take a day's trade, make sure that you are the fastest finger first. Else, just avoid budget trades. Most people get it on the wrong side, really. And a lot of smart people that I speak to just stay away from trading on the budget day. So just be careful if you're trading on the budget day, really. I mean, you don't want to really lose money on a day like this. The swings can be violent. The flows were not looking all that great. Net sell of about 3624 crores. And by the way, FIs have sold nearly $15 billion in the 4 months leading up to the budget. October, November, December, and a better part of January. We've had substantial outflows from the FI side. Can the budget do something to reverse this? Maybe, maybe not. As long as they don't do too much of tinkering, it could all be okay. Results today, Adani Ports and Tech Mahindra. I don't know how much of. By the way, yes, likely because Adani Ports might come on during market hours and Tech Mahindra likely post market hours. So important to watch out for Adani Ports. And some other numbers include an Indian hotel, a JSPL, Gujarat Ambuja Exports, Indoco Remedies, Jubilant Ingravia. Not too many names, but a few to watch out for. Stocks to focus on. And this is the important piece really today. So one, the oil marketing companies, the results were mixed. So in terms of both BPCL and IOC, the revenues were better than estimates, but margins were below estimates for both. In HPCL's case, revenues, margins, profitability, all were below estimates. So the results, to be honest, have disappointed. But which is why the Goldman note was important, and I thought I should bring it to you. Now, again, the stocks may react negatively or the stocks may react positively, difficult to call. But just hear the arguments that Goldman is putting out. They're saying that the Q3 miss was primarily driven by inventory loss related to large excise cuts of 5 rupees per liter for gasoline that happened, and for diesel as well, that happened in November. And their analysis is that these cuts resulted in immediate loss for the oil marketing companies, as a result of which there was a miss. But they are saying that this is different from the traditional inventory losses, which are driven by volatility in crude prices. And therefore, these losses that were incurred in Q3 should be considered as one-offs. So that's the one important part. They remain constructive on oil marketing companies, and they are buy rated on HPCL, BPCL, and IOC. I presume HPCL is the favorite for most. They believe the stocks are trading at a steep discount to normalized valuations. A few days back, I read a note from another brokerage, I'm forgetting which one, which said that Morgan Stanley's tactical buy on BPCL said that BPCL is not taking into account the privatization premium at all. So if that were to happen in FY23, and you never know when that happens, then that's an added incentive. But I think what GS is trying to say is, irrespective of divestment, they are bullish on all the three oil marketing companies because of a variety of factors. And you have to say, I mean, BPCL, for example, since the last 6 months has done precious little, right? I mean, IOC as well, hardly anything. So that's the point, that these stocks are giving you the margin of safety, and therefore some brokerages believe they should be bought into. Be careful if you're trading them though today. The results did come a bit softer than anticipated for most. Tata Motors, well, I think the numbers, you could argue there were a couple of chinks in the armor, but what I read from the brokerages, I'm bringing that to you. So the beat on JLR margins, certainly a positive. The company in the con call asserted that the performance will improve in Q4 and FY23, but it does indicate that the chip shortage will continue. Now, what to do in a scenario like this? There are a bunch of brokerages which have come out, because Tata Motors is a complicated result if you just look at the headline numbers, and therefore the intricacies and the con call excerpts make sense, and therefore the brokerage view probably makes more sense. So I thought Jeffrey's note kind of summarized it well, and therefore I'm bringing that to you. They, of course, they have a buy rating. The target price has been revised upwards from 625 to 635. They say that they see better times for JLR ahead as chip constraints, according to them, would ease, while the two new models would form 44% of its order book. The India business should also improve, led by demand revival, strong passenger vehicle portfolio, and margin recovery. That's the key thing, viewers, that JLR and Tata Motors is no longer just considered to be a CV portfolio. The passenger vehicle portfolio is doing very well, and which is why Jefferies has retained a buy. Kotak, by the way, is cautious. Their fair value for the stock is still higher than the current market price of 518, but they do say that the JLR realization growth did surprise positively. They're fine tuning their FY23, FY24 consolidated EBITDA estimates and maintaining their buy rating. But yeah, they have revised their SOTP based value from 500 to 585 as they've rolled over. So that's the point about Kotak. Now, this is separate, but Kotak Institutional Equities, let's get this plate off. But Kotak Institutional Equities view is what I was trying to bring you. There, they are believing that there is a bit of a positivity. DLF is the other one. Revenues at 1549 crores versus 1543. Margins at 33.6 versus 32.3. Net profit down about 16%. The good part for DLF is that bookings are at all-time highs, and net debt is at 322 crores versus 3985 crores for almost all of the real estate companies. Indiabulls Real Estate, DLF, Macrotech. That one constant thing has been they've consistently brought down net debt, which could be construed as a big positive. Bookings for DLF are at an all-time highs. Remember, the new project that they launched also had some splendid bookings. Do watch out for this one. Now to some stocks which could actually show more predictable reactions. So Shipping Corporation of India, in all probability, SCI should show a positive reaction, despite the fact, of course, that Baltic Dry Index has now started coming off. But the revenues for SCI, YOY, revenues were up 71%. Margins expanded quite significantly. Net profit, look at that, versus 131 crores, 311 crores. You couldn't find a fault with these numbers, but for the fact, as I said, that Baltic Dry Index has started coming off the last few days consistently. However, for today, the stock may well just react on the back of the numbers that have come out. So today's reaction should be positive. If you want to buy the bit gap up because you're impressed with the numbers, do an analysis of what some of the recent corrections in the Baltic Dry could do for SCI, if at all. Navin Fluorine, splendid numbers, and you have to give it to a company which has done well. I think Fluorination, most companies are doing well. You saw what Gujarat Fluoro did in terms of a stock price movement yesterday. But amidst a scenario wherein almost all spec chem companies, be it Deepak Nitrite, be it Privi Speciality, be it Vinati Organics, and I'll come to Vinati in a bit, almost all chemical or spec chem companies have reported a drop in margins. Navin Fluorine, margins went up 40 basis points. EBITDA up 24%, PAT up 16%. Pretty decent set of numbers, viewers. Maybe this one reacts positively. What could react negatively, because almost all companies which are showing a drop in margins are reacting negatively, is Vinati. The reason why you got to be careful, I'll just come to that in a bit. But first, the numbers. Revenues up 65%. That's a stellar growth. But EBITDA margins come down and out. 712 basis points are down at 25.1%, and the PAT up 29.7%. It's a good number on the revenue and the PAT front, but look at the difference between the revenue growth and the PAT growth, and that's on account of how poorly the EBITDA piece has done. Now, the thing with the Vinati is, viewers, that their commentary in all probability will be solid simply because they have a large portion of their revenues from the oil and gas business, and therefore they might actually be in a good spot considering the way oil prices have shot up, if indeed there are investments happening in that pocket. So you got to maybe play Vinati on the commentary and not as much only on the kind of numbers that have come out from Vinati Organics. Also, the stock has done precious little in the last 6 months, as you can see. So the point being with this one, just be careful if you're trading it. The numbers look weak, so therefore logically it should correct, as some of the others have done in the last few days, which have come out with poor margins. But the oil and gas thing is a bit of a thing that you got to watch out for. And lastly, Tata Steel and Tata Steel Long. So they came out with this announcement, which really did well for them yesterday, Tata Steel Long Products. But as I spoke to Nikki, my colleague, there seems to be a bit of displeasure in the street about the kind of numbers that the kind of ratio and the expenses and the premium that they seem to have paid. So maybe, just maybe, there could be a bit of a negative reaction into these. So just watch out for both of these in the session today. But viewers, also, I urge everybody who's a two-blooded investor in the long sense, to try and hear the budget speech. We'll be, of course, bringing it to you on all our social media platforms. All the TV channels would have it. It's important to try and assess what the government is trying to do with the budget. Increasing the budget should become a non-event from a market's perspective, because a lot of things should be off budget and are off budget now. But there could be a few pieces done here and there which could be interesting. Notably, I know it's a very long trade setup today, but it deserves it. Notably, a lot of people were very bullish from a trade side on the PSU banks. I think a lot of the PSU banking announcement or the banking announcement are outside of the purview of this budget announcement. So maybe, just maybe, some of the PSU banks, who knows, could correct a little bit as well. So be mindful of all of that, but trade safe. If you are going out and trading the budget on the budget day, please trade safe. As I said before, and I reiterate, a lot of wise people stay away from trading on the budget day. It's just that volatile a day. Thanks so much for tuning in. Have a safe, profitable day ahead.